Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, over the last 24 hours, the Australian dollar hasn't made any significant moves, but has respected the resistance at 77.10 overnight. Yesterday, as widely expected, the RBA kept interest rates on hold for the 18th straight meeting and maintained to keep its rates at historic low at 1.5%. The RBA did acknowledge in their statement that the markets have become a little more volatile due to concerns related to the US trade policy. Recently, there has been a slight increase in the employment rate, going from 5.5 to 5.6%, even though it is considered considerably low. Over the last couple of years, wage growth had picked up slightly and inflation has got close to their target, around 2 to 3%. Overall, the central bank seemed mostly upbeat about the economy, should I say, and appeared likely to keep interest rates on hold for the short term. From a technical point, though, I still maintain my bear view and looking down towards the initial target of 76.30.35. It is viewed that profit taking may emerge from there, but the broader picture, in terms of moving out to 3 months, could eventually reach the target of 75 cents. Overnight, the euro-dollar didn't make any real significant moves and is pretty muted at the moment after it slowly adjusts from the Easter period. The market is still a little bit tense from the trade war implications and is still the main topic list, as recently China announced on Monday that it implemented tariffs on 128 types of US imports. But the dollar index at this stage is still struggling to take on the challenge around that 90 level. At the moment, it's trading at 89.70. Now, the dollar index, as some of us may not know, it measures against the strength of a trade-weighted basket of 6 major currencies, and the euro is weighted at 57.6. My view, however, is still to the downside, and still expect to see this challenge around 121.80 to 122 the figure. It is seen as the double top reversal neckline, and if breached, would bring in the next target of 118 the figure. The dollar yen finally takes the challenge to the upside as the bulls regather in the last 12 to 24 hours, recaptures the 106 level. I'm still a little bit wary of the fact the market will sustain towards this region of 107.30. As recently seen in the past, we got a long-legged doji and a rejection, and could do so again. I still, though, on a strategy outlook of buying dips towards 105.50 to 70 region. If we do see a break of 107.30, then this would give further indication up towards 107.70 to 108.50. The pound, like the euro, was muted also and hasn't really staged any significant moves, but it's now just only a stone's throw away from the 139.15.30 uptrend. I do expect to see this level be challenged, but the market may start buying or some profit taking if short in front of this level. Nevertheless, the range at the moment still holds towards 140.15.25 to 140.80 with a firm cap seen at 142.50.90. But as I say, I am bearish. Well, this time around, gold fell away from the gains and posted a drop from 1,342 to 1,328, raising $14 off the recent rally. Overall, the roller coaster ride for this market is still pretty much in a 1,300 to a 1,360 range, and I do expect to see this level eventually to be challenged, while we continue to see a lot of noise in between. On the day, though, sees a range of 26 to 37. And rounding off with oil, I'm still expecting to see the market test lower, with $61 a barrel as the objective, and also where the uptrend comes in. Any advances should find a cap now around 63.80 to 64.20. So that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day.